another day into our fight for a fair market, and what we have here is a great article talking about what's going on in regards to hedge funds, and it's coming from the Financial Times. Hedge funds oppose SEC's reform plans after GameStop debacle. Regulators misguided securities lending proposals risk fueling volatility, say managers. Now, this piece is pretty good, published 16 hours ago. I want to talk about it because whilst it may seem unrelated to AMC directly, it really does have something related to it if we look at the wider picture. So we'll have a quick read of it, then discuss what it means. Hedge fund managers fear the painful losses they suffered in the meme stock frenzy of 2019 in January will be repeated if the US regulators press ahead with reforms to securities lending, one of the most opaque practices in the financial markets. Melvin Capital, Light Street and White Square lost heavily when their bets against meme stocks such as struggling video game retailer GameStop were pulverized by retail investors, obviously on Wall Street bets, so we don't need to talk about that bit, but the extreme volatility unleashed a meme stock battle, as we all know, and they think that a repeat of the debacle could be coming, and the US SEC, which is determined to prevent a repeat of that. So Gary Gensler said, the SEC chair, that is him, thinks it's time to bring securities lending out of the dark. The SEC has proposed extensive reforms to securities lending arrangements which allow hedge funds to pay a fee to borrow stocks and bonds in order to bet that the asset will fall in value. They know the process as short selling. Lenders and lending agents will together pay about $375 million in initial costs and $140 million annually thereafter to comply with the proposed reporting requirements according to the SEC. But the drastic changes in reporting and disclosure standards planned by the SEC have triggered opposition from hedge funds and other key players in the securities lending, including BlackRock, the world's biggest asset manager. Now come down a bit further and we get to read about why they think this is bad. Jennifer Han, head of regulatory affairs at the Managed Funds Association, the Washington-based trade body that represents hedge fund managers, said that SEC's proposal were misguided and could create more meme stock style volatility, leading to similar situations such as the GameStop event. Sahan said that the MFA was strongly concerned that the market participants would be able to reconstruct or reverse engineer a fund's trading strategy if the SEC insisted on highly detailed reporting of securities lending transactions, even if this information was anonymized. Similar objections were voiced by Alternative Investment Management Association, the London-based trade body that represents hedge funds and private credit managers with combined assets of more than $2 trillion. Anyway, the SEC's proposals would allow traders to front run or short squeeze hedge funds that bet against company stocks, said Jiri Carroll, I believe it is, head of the Government and Regulatory Affairs at EMA. Several hedge fund managers say they saw little upside in talking about their short positions in the current environment. David Ihorn, founder of Greenlight Capital, which made a big bet against Tesla and Lehman Brothers, has sharply curtailed his public discussions around his short positions, and he declined to comment. Anyway, that's the main part of the article, which is important. You can have a read of it in your own time if you do wish to do so, but we get the gist of what it's talking about. Of course, the detailed stuff is later on, but that is the most important areas. So what does this mean, right? It means that if the SEC does go ahead with this, trying to make it more transparent to more people, hedge funds are saying that that could actually have the reverse effect, as it could mean that people could go against their trading strategies. And right now, I do think that's quite a funny thing to say, because let's think about this one, okay? Now, whilst this is only proposed, and I am not a financial advisor, and this is all my opinion, which I'm about to say, what we have now is a market where hedge funds dominate. We already know that is a fact. Hedge funds dominate and account for the majority of trading which goes on. So right now it's a hedge fund dominated industry. And what the SEC are proposing to do potentially is make it a bit more transparent, mean that that data which is going on, especially regarding shorts, can be shared across all individuals on the wider market, okay? And that's not necessarily a bad thing, not necessarily a good thing, because that data can be anonymized. But it does give everybody the insight that they need to know what's going on, right? So you can have the apparent truthful data in front of them when making a decision. And hedge funds, some of them at least, are complaining now about this because they don't like the concept, because it could allow people to play against their trades. And isn't that kind of funny, right? I think that's kind of funny in my opinion, because if we think about what this means, okay? Hedge funds, if they were to play the safe game, to play the fair game, which we all want to play, it could lead to more of these frenzies in the first place, which could cause more short squeezes, right? Well, if that's the case, who does that say more about? Does it say more about the retail traders, or does it say more about the hedge funds? If hedge funds have the ability to get caught out more than once, more than twice, more than 3 times, if they can keep getting caught out in short squeezes, who is the problem there? Really, whose strategy is wrong? If I'm a retail trader and I start off the year with $100,000, but guess what? I lose 90% of it, okay? Everybody's going to say, that's your fault for being stupid. But if I'm a hedge fund, and I'm a short hedge fund, and I'm losing money due to the potential of a short squeeze, is that not the same market forces that mean that retail investors are losing money when AMC drops right now, or other meme stocks for that matter, because it doesn't even matter which stock at this point, this is more wide related. But tying this back into AMC, right, I think what I'm trying to say is quite obvious to most by now. Why is it such a problem that this is going to be brought out of the dark? If it's going to take this much amount of rigging for them to keep winning, does it not say their strategy is fundamentally flawed? I personally think it does. But really, if that's what we're looking at, guys, if that really is what we're looking at, which of course is not confirmed and it's not apparently the case for all, but if that is the case for even some hedge funds, if this is enough to catch them out, what does that say? What does that say about them, and what does it say when we tie that back into AMC? I think it shows us that we're in a stronger position than we initially thought, and the people who we're playing against may not be as clever as they initially portrayed. Again, it's just my opinion, and it's not financial advice, but I hope you did find the video informative, interesting, fun, useful. If you did, of course, smash the like button, subscribe. More of this sort of content's coming out every single day. Hopefully more to come later this evening as well, so make sure to join us for that, and I'll see you then, guys. Goodbye for now. Thank you for watching through till the end, but let me tell you about our Discord. So on your screen you will be seeing the N2S Finance Discord. Obviously it is split into multiple sections. Basically at the top we have updates from me and all that kind of good stuff. If you scroll down a bit further we have the main sections where we focus on cryptos, SPACs and other hot stocks including penny stocks, even stable growth stocks as well, and we even have a special AMC GME chat. If you scroll down you can see some research and DD from the community. We also have funny memes and you can see actual contributions from members down here. And again, if you do join us, it is completely free, link is down below. But if you do want to become a Patreon, you will actually get a pink sticker which will be displayed on your name. So your name will come up in pink as mine comes up in red down here, and that will show that you are a Patreon. But other than that, guys, you can join completely for free down below. You do not have to pay anything if you do not want to. Thank you for watching, see you soon.